that it's not a closed book or closed mind, but primarily an open book, open mind, and open discussion. I hope that when you look at this and we can talk about some of those answers.
So if this is an exam, can we just scan for the answers?
Yeah, if you want.
If you're that good, yeah, go for it. Thank you.
Okay. So everyone's got a copy? Everyone got a copy? I got a lot of materials to cover. I may skip some, so if I skip some of the material, I will cover it next time, okay? Because I have a lot of materials to cover. And so, first one, price moves up on higher volumes. Who is doing what?
The big boys are
Okay, the big boys, professionals are doing what? Buying. Okay, price moves up on higher volumes. Professionals are buying. So when the professionals are buying, if you want to jump in, probably you can, you get you will ride along, Okay, B, price move up on lower volumes. Who's doing what? Amateurs are doing what? Buying. Okay, that's pretty simple, right? When the price moves down on lower volumes, who's doing what? I'm hearing amateur, I'm hearing professionals. So, price moves down on lower volumes, who's doing what? Amateurs are selling. Right, amateurs are selling. Okay, price moves down on higher volumes, who's doing what? Professionals are selling, right? So, is this pretty straightforward? This is pretty straightforward. So when you are looking at a stock, if you are thinking about taking a position, those probably the first thing you should look at. Even though the price may be moving higher, but you have to look at volume. If it's a very low volume, be very careful, because if the professionals are not buying, it may not carry the momentum up. It may be, next point is maybe going down, so, okay? E, the concept of investing is to what? My principle.
Preserve and increase.
Increase.
Or preserve.
Preserve the principal and increase it,
Right.
make it more.
The concept of investing is to preserve. Why is so important?
You don't want to lose it.
You don't want to lose this. Right,
Would
right.
you not say preserve and increase? It's obviously the principle is the principle, but if you just wanted to preserve something, you could bury it in the ground.
That's true, like the rate of inflation could have,
Right, so preserve and increase would be the concept as well?
Yeah, preserve, but the concept is to preserve it first.
Right.
So that you're not taking risks. You're not taking unnecessary risks to jeopardize losing your principal. Okay. So F, the concept of trading is to what? To my account. The quick profit is what? Is to increase or to trade. Okay, to increase my account with quick profit in shorter time frame. That means you have to be very active in trading, meaning that you have to keep your eyes on the ball, right? If you don't keep your eye on the ball, I mean, that position that you enter may go against you, because that's what trading is about. So, in my first class, what percentage of your portfolio should be devoted to trading and what percent should be devoted to investing? Do you remember the percent? 10% to trading, 90% to investing. But again, that is just a rule of thumb. You could, if you feel more comfortable with a lower amount in trading than, say, 5% or whatever, depending on how big is your portfolio really. Okay, if you can sleep at night with 10% the trading account, so 10%. If you find that you're always nervous when you sleep at night, you're wondering whether that stock you own will go against you, perhaps the size of that trade may be too much for you. You need to lower the amount that you put in your trading. Okay? G, a support level is like the what of a house? The foundation or the floor, right? I talked last week about the sinkhole, right? So if you have a sinkhole happens right in front of you while you are sleeping, you could drop into the sinkhole. So what happened is you tie a lifeline on your waist, right? But it won't happen that much in Texas. I haven't heard there's a sinkhole in Texas yet. But it happens a lot in the southeast, right? Southeastern state. That it could happen. Could happen. Yeah. Okay, there are two emotions that we must master in the stock market. They are what?
Fear and greed.
Fear and greed. Okay. So tell me, why are we so fearful about the stock market, about trading, about investing?
Losing money.
Losing money,
It's like
exactly.
gambling. It's like gambling.
Like gambling.
In a word.
Okay. So do you believe, so is investing same as gambling?
No.
Sometimes.
No.
It is.
Yeah.
It's
Trade.
legal.
Gambling.
It's legalized.
Yeah.
Legalized gambling.
Of course.
Okay. Can you manage your fear in the stock market? Sure.
You have to learn.
Don't
You
invest
have to learn
something
how.
you can't afford to lose.
Yeah, but also that will be the second part of my lesson is that you must have some trading rules. You must have some rules. When you get into a market or get into a position, you must know when you go do what. Because when you take a position of a stock, it could go three ways, right? It could go down, it could go sideways, it could go up. You must have a game plan for each move. This is like playing chess, right? When you make a move, you have to think that you are playing against an opponent. What if your opponent go down or go sideways or go up? What will you do? You must have that in your mind, in your game plan. So that when that happens, then you're not panicking. You are not fearful about losing. Because in a trading rule, if you said, I'm only going to, if it ever dropped below 7%, 8%, or whatever percent you feel comfortable, if it dropped more than that, I'm going to be out. That's your lifeline. That's your lifeline. At least you may lose something, but you're not losing everything. Okay? So that's fear. What about greed? What happens when you're greedy in the stock market?
Karma.
It's almost like pride, because then you're thinking that you're the one that's doing this and want more and more and more,
Right,
as opposed to accepting the gift and.
right. Greed is when you have a position that you are making higher and higher profit, and you believe it's going to go higher, it's going to go higher, it's going to go higher, and you keep holding on to this position. Okay, so you have to take some profit. So that's why on the trading rules, you have to have a strategy. When it goes up, you want to take some profit off. You want to take some profit off. The best position to be in is when you're able to take the principal you invest in that position off the table. Meaning that you already got your money back. And all you're paying is what we call the house money. And you can buy it longer. but you still have to start taking some profit off. Okay, again, the trading rules will help you. So those are the two emotions we must master in the stock market, your fear and greed. And when you have your trading rules, that will help you. But you have to follow your trading rules. If you run against your trading rules, you're probably going to lose money. I lost money for violating my trading rules. Okay? Okay, true or false? I can buy stocks below the support level to gain a bargain price.
You shouldn't though. You should talk.
So what happened when you buy below the support level?
You're risking.
You're risking. Remember the sinkhole example, right? How far will the sinkhole go? Do you know?
No.
That's true, you don't. I would only do it if it was on a roll. And you can never be guaranteed, of course.
Right, yeah. Then, right, the idea is, if you want to safely make money, try not to buy stocks below the support level, because you don't know how far you're going to drop into the hole. Okay? I'll probably bring a chart next time. It's called the percentage recovery rules, meaning that if you lose 5% in a position, on your next trade you must gain so much in order to just get back even. Okay, so the deeper hole that you fall into, the longer climb it will take you to come out of that hole. So that's why those two emotions, we must be very careful. We must master those two emotions by doing what? By following the trading rules. Okay, J, true or false? A stop order is used to protect me in case of big losses. Is that true or false?
True.
True, very true. Then let me ask this. Do you ever have a position in the open with no stop loss orders? You should, but we still do.
Well, you have to make the determination at the end of the day if you're
Right.
gonna leave it overnight or not,
Right,
right? So that's one point that you have to
Then-
decide on.
right. Then you have to keep watching the stop, right? I don't like that kind of living because I don't want to keep looking at the stop
Exactly.
throughout the day. So it's always a good idea to use a stop order. Just in case something happens, if there's some bad news out there, you know, sometimes you see a stock chart that the price will just drop by a lot. Some bad news happens to the company, there's something, or the CEO, something happened to him or what have you. Yeah, I saw the news today, Apple CEO, Tim Cook, right?
Yeah.
Yeah, he said, I'm proud to be a gay, I don't know that will impact the Apple stock or not, but some people may take issues with that. But he came out open to say that. Now, things like that may cause the stock to drop. I don't know. I don't know, So if you're holding, a stock like that, will that cause it to drop? You don't know. So it's always a good idea to have a stop loss order. Just in case something happens, it will take you out and you still have majority of your money in your pocket.
Including overnight?
Yeah.
Okay.
Would you do this for trading and investing, or just for trading? If you were gonna buy something long term,
Yeah.
would you need a stop order?
Depending on if you're investing in mutual funds or you're investing in stocks too. But for investing, for mutual funds, then you're buying a basket full of a lot of companies. Then you probably don't need to have a
In case
stop
there's a
loss.
market correction, in
Right.
case there's like a large market correction, you can still have a stop order against ETF or mutual fund.
Mhm.
Would you do that for both? I mean, regardless if you're trading, short-term trading versus long-term investing, you said don't ever leave
Mhm.
it unprotected.
Right.
So you would do that for for both short-term and long-term?
For the investing, I invest in mutual fund. I don't put a stop order on the mutual fund. Okay, because I just have a mix of some mutual funds, some bonds, and what have you. I just have it, allocated percentage-wise, because I let that ride for a longer time period. Versus trading. Trading is I'm in and out, so. Yes, sir.
There's
Yes.
some mutual funds that you can't put stop loss. I mean, you have to give them either 30-day notice or some, I've even heard
Oh,
6-month
some mutual
notice
fund, yeah.
that you want to get out.
Right.
But other than that,
Yeah.
you're in.
Very true, very true, yeah. So the stop loss orders primarily I'm referring to like stocks or options, so those are you trade options. Okay.
Jack,
Yes, sir, yes, ma'am,
did you say, do you ever have a position to not use a stop order or to use a stop order?
to use a stop order,
Okay, thank you.
yes. Okay, K, true or false, trading is too complicated, so I better let the professional do it for me, because they know what they're doing.
Oh. We don't like
You don't like that?
that.
I'm surprised. I thought at least some of you will say, yeah, that's true. So the whole class believe this is false.
Yep.
Oh, good.
Otherwise, we shouldn't be here.
That's
I'm
right.
glad.
Is that the right answer?
I'm glad. Yes, it is the right answer. Because I learned my lesson to leave my money with the professional, because in 2007, I gave a portion of my money to the professional, to a certified financial planner, to a CPA, a certified public accountant, chartered financial analyst. I mean, that guy's got so many alphabets, so many initials, okay? And he was a banker, so he started a bank, so he's got very impressive credential, right? So I gave him the money, and lo and behold, in 2009, right, the stock market dropped by 45, almost half, not quite half, like 40-some percent, okay? And when I reviewed my portfolio with him, and he said, well, your portfolio only lost by 38%, and the stock market lost by 45%, 46%. You should be happy. I lost less money for you than the stock market. So I should thank him for losing less of my money. Do you know why? Because the professionals, they are gauging their performance against the index. So if they do better than the index, they feel proud. So even though you lose money, you should be happy. That's wrong, right? So, no. So the professionals do not necessarily know what they're doing. Okay, quite often they don't. Okay, L. True or false? I do not need trading rules because I have instinctive knowledge of when to buy and sell stocks.
No way. No way.
Okay, good. Good, you guys know all answers already. That's good. I'm impressed. I'm impressed. So there's no answers that you guys disagreed with.
No.
Okay, that's good. That's good. That's good. Okay. Okay. I want to. I'm just going to cover a couple points on the trading rules. I will go more into details next time because I do have other stuff that I want to cover. The trading rules I got here is really for your reference. You can take that and you can use this, modify it, you can add to it or you can remove it. But this is just a starting point for you so that when you do your paper trading or your real trading, that will serve as a starting point for you. Okay, that's what I use. Remember last time I showed you the support and resistance level? Okay, I draw those channels. When you pick your, oh yeah, very good, okay. So you should only, just a rule of thumb, trade stocks with a 10% channel. 10% channel meaning that if you have a stock that is like a $20 stock, the width of the channel should be at least 10%, $2. So if the channel is less than that, there's really not much movement for you to make money. Okay, not much movement. So that's the trading rule. If you have greater than a 10% channel, then you have a better chance of making a sizable amount of money. Okay, then I want to jump to B. Use stop loss or alerts. Stop loss price, entry price times 0.92, 92%, meaning that you're willing to accept a 8% loss if it goes against you. Remember what I said earlier, when you take a position, the stock will go three ways, right? It could go down, it could go sideways, it could go up. Hopefully, when you scan it right, when you make your predictions right, hopefully it will go up. But you could be wrong, right? You know, you could be wrong. And what if you're wrong? When you're wrong, in this case, I put an 8% stop. If I'm wrong, it will take me out. I'll lose 8%. But at least I still got 92% of my money. But I believe Jeff mentioned in my first class, you have to be careful in some stocks that the daily swing will be more than that. So that is a very volatile stock. If the stock moves by 8% a day or a week, that's a pretty big move. Okay, so you just have to watch and look at, review those stocks if it's making that such a big movement. Some of the volatile stock may make that kind of move, but you can kind of see the history of the stock and see if they're making really that big move, that 8% move. But if there's not, then if they make an 8% move, then you probably want to get out, and you can always find a better entry point. Okay. I'll probably go more to that next week, because I believe the trading rules are very important for your success. Okay, and you always want to fine tune your trading rules, because the trading rules will determine whether you are successful or not. Okay, when you are making money, does that mean your trading rules works? It probably does, but you probably will learn more when you make mistakes. Okay, then ask yourself if you are following your trading rules, or if your trading rule is too tight. Maybe 8% is too tight, or maybe 8% is not tight enough. Okay. Okay, I want to spend the next 10 minutes doing part 3. Okay, step 3. Next step. I know last time, back 2 months ago, you guys were, yes, Jeff.
Okay. Just put something on the board before you get into this next step.
Yeah.
So I want to address the channel.
Okay.
Stop loss,
Mhm.
kind of all in one thing. I think I can do it pretty
Please,
simply.
please.
Okay, if I write on that,
I
you've
think
got
you
a
should get to
Yeah,
the back
right
page
here.
or something.
Oh, you want?
I don't know, it's got a little marker on it.
Yeah.
Meaning usually the blank page.
He's got something on the very last page. Mary, what do you think? Can I write on this?
Yeah, go ahead.
Okay. So when he's talking about channel, can somebody tell me what he means by channel?
It means between the support line and
Resistance.
whatever this other one is.
Okay.
It's the distance.
In what type of stop? Going up, going down, going sideways, all of them?
Oh,
You mean what kind of trend?
I would say going up.
Because it's
These
at
are
an
up
angle, is
plays,
that what
these
you
are
mean?
up
It's like
plays.
trying to,
Okay. When a stock moves up, down, or sideways, it doesn't go like this. It goes like this. Or it goes sideways,
right.
down. This is where you got to be careful on your stop losses, because if you get caught on the wrong part of this, you're going to get out needlessly. So when you talk about channel, I think this is what you're referring to as the channel, right? Is
The resistance
basically.
line.
Support to resistance.
Now this wouldn't actually be a support line. Support line's a little different than this. These are actually just channel lines. This is more support and resistance.
Because it's, like a rolling trend, or because what's the
Well,
difference in
actually,
that?
your support lines, these are actually also called pivots,
Right,
and they actually start, so your support lines are here,
okay.
and it builds up. So when it breaks the support, this is when you know that, you're expecting it to keep going like this, because that's the trend. As soon as it does this and starts going like this, it just broke the trend right here. So this would be your support, because there's a saying, old support becomes new resistance. So this support now is where it now stops.
Hey Joe, can you come to the other side, because all these,
Yeah, sorry.
can you do that?
So this is trending, that's how a stock moves in an uptrend. And these will be your channel lines, but actually your support lines will come here. Because this is where people were buying before or selling before. So this is kind of what they call the pivot point, where the stock should move if it's going to stay in an uptrend. These right here are what would be support lines, not this. This is a channel line. Channel line is something that you're just kind of artificially drawing just to give you a guide. But as this is an uptrend, the reason for your stop loss is because you're buying here because you are expecting this to continue up in here. It's not going to go up forever, but as long as it does go, you want to be able to gain from it. So this is what you want to be aware of, is when it breaks this. Sometimes it's what they call a pokey, where it just pokes through, fakes you out, and then goes right back up. And I think we looked at that chart a couple weeks ago, where it was of the S&P, where many times it kind of broke down here, but it always went back up. So this is 8% or whatever it is. This is what we're talking about here. But this is what you want to be careful of. The trend changes, which it does. And if you look at any stock over time, it doesn't go up forever. It is going to change, at least for a bit. So your channel lines are a little different going this way versus up or down. So on this is your support, this is your resistance. This way you're playing, you want to buy around here, and you want to start selling up around here. You don't need to sell everything, because it might keep going, it might turn into an uptrend, but sell most of it. And then buy it again here. And then if it breaks down below this is your stop loss down here. So this is a little different strategy than you would have here or here. Any questions? Does that make sense? So your stop loss really depends on your strategy, whether you're going in an uptrend, whether you're going in a sideways channel, or whether you're going in a down. Fear and greed. See, this is, I remember the first class repayment, this is when the stock market it came down to down here. And everyone was saying, well, we need to sell because it looks like the market's going to go down. The market's been going down. That's the fear. This is the hardest time to buy, is when you should be buying. That's why it's fear. This is the hardest time to sell. I just made $5,000 in a week. This is incredible. I'm going to make more. I don't want to sell now. I can be making $10,000. That's the greed. This is the fear and greed. This is why you have a system that tells you, I buy at the bottom of a channel, I sell at 75% near to the top of the channel. And you have to follow your system, because you follow your emotions, you're going to do the exact opposite of what you should do. Downwards, it's harder to play in the stock market unless you're shorting. So I think pretty much we're not even going to deal with downwards, right?
Not right now.
Basically, if this happens, you get out of the market and go buy silver coins and stuff. So basically a stop loss here, so you understand where your stop loss would come in. Your stop loss is really, you're putting an 8% on it, but it's really, you want to see that it's definitely, the trend has changed. You got to give it a little play room to do. That's why you have 8%, 10%, or whatever it is. Stop loss here is a little different because you're playing the channels. Here again, at some point, this is not going to go like this forever. It's a beautiful stock if it does, because this is a system to play stocks that do this. Different totally system than stocks do this. You don't have the same rules. These are different rules. You break down and all of a sudden you're in a downtrend, or sometimes it'll break through, go in an uptrend, and your system for here is not going to work anymore because now it turns into this stock and that pattern. So you'd have a different stop loss there than here, but mainly a stop loss is there to tell you, hey, my system that I've been playing it changed. And It changed Who Moved My Cheese. Anybody know that book?
Yes.
Right.
Yeah.
You got to change your system to either this or this, and if it's this turns into this, and our system here is to get out, then as soon as it turns into there, you're out. You look for something else. That help?
Yeah, very good.
And while you're there, can I just ask a question? The 8% versus 10%, and when we did the seminar, and they talked about the professionals grab everybody when they're at the 8% a lot of times, are you a proponent of doing 10% versus
I
1,000?
haven't a clue. I don't even look at that. So me personally, I don't look at that. I look at charts, and the charts kind of tell me when a trend's change. I just look for trend change. So I don't know. I could go back and analyze if it's 8%, 10%, or 20. I don't really know.
Okay, so you don't have a rule that you do a standard amount? Okay.
Thank you, Jeff.
Thank you.
This clarifies a lot.
Does.
Yeah. It's always a good idea to hear from another person, right? Oh, sis.
Okay.
Oh, Jeff, is this yours?
Thank you.
Okay, good, good, okay. Now we come up to the next step. I know last time, about 2 months ago, you guys were in the 4 different teams, right?
Right.
Did those 4 teams continue, or did that kind of,
That kind of fizzled,
Yeah,
dissipated.
kind of
no, no?
It was like the bottom.
Oh,
I'm sure we could trend back up.
okay,
I feel,
okay.
I'm willing to put my money on that.
So for the next part of the lesson, for the next few weeks, I want to have 4 teams in here, okay? 4 teams, and I will have some assignments here. So how many people we have here? So how many? 4,
People are missing tonight.
yeah. So about 24, 26, right? So if we have 4 teams, so each team will have roughly about 5 or 6,
6 or 7.
6 or 7.
27?
Okay. So, okay, let me ask all of you. Do you want me to randomly distribute the team assignments so that you will know, what you belong to, or you prefer to stay with the folks that you know and you
Stay
had
with the
started
folks
last
we
time?
Yeah, we have
Yeah.
emails already, and we know
Yeah,
each other's
did
emails, so probably.
Yeah, we haven't used them, but it's true, we do. We do.
Okay.
There's been new
We
people.
did, give us some credit here. I'll give you
Okay.
guys credit.
Okay, so it looks like we want to reuse that same group, same team
Yes.
from last time, right?
Yeah.
Okay, so out of those 4 teams, do we have like a team leader or team captain?
No, but Jeff is ours, I'm sure.
So Jeff, you're
Master
one team,
trainer,
right?
I'm like,
So let me give you your team's handout. I use the 4 team name. One is called the Team Theta, the Team Vega, Team Delta, and Team Gamma. Those are the 4 Greek alphabets being used in the option pricing model. One of your assignment is to tell me what the meaning of those Greek alphabet is. I'm sure Jeff know that, right? You already know that, okay. Okay, second team, Team Vega.
So
Do we have
who's
a
number 1? Who's
different
team
one?
Who's
Team
1?
2.
We were one,
Team-
Marlon.
we were one.
You are one?
Okay, 3, sorry.
Okay, so that's one team.
I thought it started
So let's
from,
say you are Team Vega, okay.
Vega,
This
are they Team Theta or Vega? Team 1 is gonna go where?
Team 1 is
Theta, okay,
Right.
so that's
Team
team
2
2.
is
We were one.
We were right behind you.
You go ahead and
You sit right there. We were right
distribute
behind
to
you.
your
Row
team,
us.
okay. Team Delta was the number 3 team.
We were number 2.
Do we have number 3 team
I know
last
it's by
time?
the stock we were.
I
Oh,
know
we
we
were
were 3.
3. We were 3. And Alfred.
But
Okay.
I don't even know who's here from,
You
you and me, is there anybody else?
I was going on with myself.
or you want me to distribute it, so,
I don't think we even have team
Wait,
members.
do you remember the stock for each team?
Morgan
That's what I remember.
Stanley.
no, I don't.
Yeah, we were,
I don't.
We were micro.
Tell you what, I'll make it easy for you then.
Morgan
All
Stanley.
right, well,
Shared in there.
Yeah, we're in team, this is team
Group
two.
two. Okay, group two.
Morgan Stanley, yes.
So
Okay.
Morgan Stanley, right,
Yeah,
we're
we're-
in the stock.
I'm not a team leader.
Yeah.
No,
Danny.
no, we haven't picked on the team leader yet.
Okay,
This
I
is
see
just
two.
your assignment,
which one I was in.
okay?
Wait a minute.
No, I have not assigned the team captain yet, I'm just distributing the team assignments.
Question.
So you guys will,
Is this supposed to be
Oh, no,
maybe
no,
team
I'm
three?
not one of your team.
Go by the stocks, we know what stocks we did.
yeah.
The people
Uh,
we don't know who we are.
There's Micron, Morgan
Time
Stanley.
out here, time out here. Okay,
That might be.
okay. One is Southwest Airline, LUV.
Who had that?
One is MDRX.
We had that.
We had Morgan Stanley.
All right, so which number goes to each stock?
Yeah, because we know our stuff.
Wow.
We've been.
Either
It
that or.
doesn't matter, it doesn't matter.
Okay,
It really doesn't matter. I just want to break the class up into four
okay.
teams.
We'll call it out by stock and then we'll all know where we are.
Yes.
Okay,
Yes.
Morgan Stanley,
Morgan Stanley.
Morgan Stanley, 1,
Okay,
2,
all right.
3, 4.
that,
We're
There's only
missing
4
half
of
our
us
group.
now, so
Yeah,
we've
so-
lost a lot of team
Becky's
members.
not
Morgan
here.
Stanley.
Well, they'll be
Morgan
back, right?
Stanley, you're Morgan Stanley, right?
Yep,
Okay, Morgan Stanley,
Morgan Stanley.
okay, here,
so we're gonna be Team Delta.
right. Okay,
So here's an extra team Delta.
I was on the Micron team.
okay, oh, there's a Micron, yes, yeah, MU.
So I hope
Is there a Micron, okay. So, Jeff,
Theta.
since Theta, okay, why don't you distribute your sheets to those people that got their hand raised?
We need a fearless leader, Jeff, who is doing Morgan Stanley.
Really?
Four people now. We're
I'm
missing a
not
lot
on
of
that
people.
one.
Well, we're still missing a whole lot.
Okay, I believe there's one more stock, MDRX, right?
Anybody
That
else?
was Thank
No, it's always DRX.
Okay, so you got that already, right?
Yeah.
Team, Team Beta, okay.
We have a team
We pay them?
I believe there should be one more team called the Team Gamma.
That's
Southwest Airline, Southwest Airline, right?
Okay, so who?
Okay, you're Southwest Airline? Okay, then you're not Team Delta.
One more?
One more?
You're Theta, you're Morgan Stanley.
Okay,
I got a Delta one.
Yeah,
You have a
because
Theta, you're a Theta.
okay. So, who else did not have a team assignment yet?
Theta's Micron.
Yeah.
Who else did not have a team assignment? Everyone's got a team assignment? You want to be part of the team? Oh, you don't want, okay. So, anyone who does not have a team assignment sheets? So everyone who choose to be in a team, got a team assignment, right? Okay, so if you look at your team assignment sheets, I believe number one is pretty much the research, the definition of that, the term that I gave you. That's your name of your team, okay? Get to know the meaning of that Greek, because that is your team name, okay? All right, so number two is coordinate with rest of your team to decide on the following before Sunday. Why pick Sunday? Because I figure it may take you guys several days to decide who's the team captain. Or maybe you could decide tonight, you know? Who's the team captain? And who will set up an account with Train Monsters? Okay? Now again, I gave some instruction on how to set up an account with Train Monsters. Now, you don't need to fund that account, you just need to set it up so you can use their tools. Okay, so you have to decide who among yourself will set that up and who will run the stock screener tool. All right?
Is this for paper trading?
Yeah, we haven't got to the,
Can we go set up an account ourselves?
you could,
Everybody
yeah,
can, right? Practice,
But
yeah.
I just want one team to do it for the team. Individual, you could do whatever you need to do, okay? And on number three, I said select no more than 4 criteria in the trainmonster.com, okay, to identify at least 2 actionable stocks. Okay, use last week's material as a starting point. Number 4 is write a statement to identify the order of priority of the above criteria before running the screener tool. I even give an example of that statement for you. You can use that as a starting point, or you can write your own, or you can modify that. Okay, so I make it easy for you guys. I did all the work for you guys already. Okay, so that's why I said based on all circumstances known and unknown to us, show me the screener criteria in order of priority that generates a list of stocks to yield the greatest profit potential within 7 days and shows truth, love, and respect for team whatever. And then you list those 4 criterias, and then do your scanning.